Hey, good evening. Dan Fitzpatrick here, stockmarketmentor.com. And I want to look at gold here. This is not a buying opportunity. If you look at the weekly chart, this is like a bearish engulfing pattern times two. It really completely erases the last 2 weeks of trading in here. See? This box completely engulfs the last couple of weeks. And this is a type of thing that when it does happen, it's a pretty powerful signal. You know, it's not foolproof by any means. For example, you look at this here, you got kind of the same thing, not quite, but you got kind of the same thing. But here's the difference. This thing was real close. In fact, it fell to the 200-day moving average. Here, we're way above that. We're way above the 200-day moving average. So my suggestion, this is really easy. My suggestion is don't do squat on this. This is twice the average volume in the stock. Wait for the stock to get down to 170 or so, and then still do nothing. You need to let gold rest. You know, there's a lot of gold bulls out there who are talking about the Fed, inflation, this and that and the other thing. And then Paul Krugman, I never read his crap, but I saw a headline where he says gold isn't up because of inflation. It's because of something else. I was personally feel my IQ drop by 5 points whenever I read anything that Lemming says. But the point is, and there is a point to this, everybody has an opinion on gold. Everybody has an opinion on why it's up so much. They'll have an opinion on why it's down right now. What I'm telling you is let this thing fall down or let the 50-day moving average catch up. Realize that the uptrend is still intact, but this is not the time you want to own gold. I would rather not own gold here at 180 bucks and then buy it back in November at 185, because I think that between now and then, you know, I mean, you literally get this kind of thing, and then hopefully gold will start moving up. So to me, it looks like the best part of the party's over. Again, I'm not saying gold's just going to go down. Let's not misunderstand. I'm not saying this is done, this is the peak, and now gold's going to fall back, break through the 200-day moving average, and that's all. It could very well do that. I'm talking more about what not to do. What not to do is don't get sucked into this and buy it. You can always buy it later, but when there's more risk to the downside of the red box being filled, then there is risk to the upside where the stock could come right up here. This is something that I want to stay away from. I want to wait and see where the stock is to a point where when it starts to move up a little bit, I can say, well, I think the stock can come in and fill this entire box. So anyway, that's what I got to say about that. Also, I've been talking about this before. Don't forget about our fast track program. We got like 30 videos that we're sending you, and these aren't cheesy videos. These are really hardcore trading lessons that you need to know, and it's all part of your membership as Stock Market Mentor, your free membership. So sign up for a free 30-day trial. The worst thing that's going to happen is you're going to cancel after 30 days and you're going to be a lot better trader. Like that's literally the worst thing that can happen to you. To me, that's a no-brainer trade. All right, see you guys next time.